back to Getting to Know the Department with Bank Austria. My name is Alia and I'm from Isaac, and with me is
Rainer Hackel. I'm heading the Department of Strategic Credit and Integrated Risks here in Bank Austria.
Nice to meet you.
Nice to meet you.
So, can you please give us a bit of an explanation what you do? What does it mean to be part of your department?
Of course, with pleasure. So the Department of Strategic Credit and Integrated Risks, it's already a telling name, is responsible for basically 4 different topics. We are on the one hand responsible for credit risk models. This is the part where we are developing credit risk parameters to understand the credit risk of a client in our loan business, and where we also apply these models in order to understand how much capital the bank has to allocate to the business, which is a requirement the regulators have set up across the European Union, but also in other geographies. The second part of my department is called Credit Risk Control and Reporting. Also here it is clear what the department does, more or less. So they are reporting mainly in the area of credit risk, on asset quality and loan loss provisions, which is the concept that in case there is a risk of clients not repaying the loan, the bank has to provision for such risks in the balance sheet context. Then we have one unit which focuses on integrated risks and is also very much connected to technical issues such as definition of default. Integrated risk refers basically to a function that tries to consolidate the overall risk profile of the bank, and also presents this in a structured way to our managerial bodies in order to give them a good underlying understanding of the decisions they make and the current risk profile that the bank has. The last unit I'm responsible for is so-called real estate appraisals and second level controls. In this context, we are analyzing or evaluating the value of assets that are pledged in favor of the bank when loans are being granted, and these evaluations have to be, let's say, have to undergo a second level control, and this is actually done in that unit. So we are trying to make sure that the external appraisals that are being produced are showing a fair picture in terms of valuation of the assets.
That is very interesting. Can you maybe show us or tell us exactly how all 4 units are connected in a way? How is what you do with one department reflected on the other one?
Yes, of course. So you can imagine it in the following way, that you have the credit risk part where models are developed. So you, for example, developed a model for the probability of default of a customer. These models are then applied in the granting business.
Okay.
The outcome of the models is basically translated in a certain risk profile that can then be reported. This is the part of risk control and reporting. So the asset quality of a portfolio is reported to the management. And then you have risk integration, again the telling name, where you have several risk parts that are present in the bank where it all comes together. The risk integration part is also the part where the risk appetite framework is put together. This is a concept where the group defines for all various types of risks the level that we are willing to take for our business ambitions, and sets very clear targets, triggers and limits for these risks. And basically all of the various risk and also business and finance counterparts provide us with the respective KPI inputs, where then it is then measured if we are in line with our defined risk appetite, and in case there are deviations, what should be done in order to rectify the situation. So these are the 3 units that are basically integrated with the topics I just mentioned. And then we have the real estate evaluations and second level controls unit I mentioned earlier. That is basically an integral part in the course of the underwriting process, and therefore not directly connected to the underwriting process, but in strategic risk. Why? Because there needs to be a certain level of independence. So second level controls should basically not happen in the same unit where a task is performed, but it should be detached in order to avoid any kind of conflict of interest.
Okay. So it's kind of the second part rechecks the first part.
Exactly, yeah.
Okay, that makes sense. Then, because it's a very complex topic, and for me, for example, it's a very new topic, my question is, then how do you translate this into your day-to-day job? Because it makes sense as a model and how the things are connected, but what would you do on a day-to-day basis to make sure it works that way?
I think this also depends a little bit on the unit. So as you can imagine, for reporting, you have usually a cycle that is very much on a monthly basis, quarterly basis driven, where depending on the outcome of certain risk results, reports are produced and then forwarded to various managerial bodies, to senior management, or even to group bodies.
Okay.
For credit risk models, for example, you can imagine it more in a sort of project style. So you are working and trying to improve, for example, a PD, probability of default model. Usually we have here a lot of interaction with the regulator. This is the Joint Supervisory Team and the European Central Bank, who are responsible for allowing the banks to use those models to calculate their capital requirements. And usually there are certain obligations and requirements with regards to these models that need to be upheld. And we are basically constantly working to improve these models in order to depict, of course, the credit risk, but also be in line with the obligations we have.
So it requires a lot of critical thinking and analysis, and also somehow fast-paced thinking or fast-paced environment to be able to update.
Yes, it depends. I think what it requires for sure is, especially when you go in credit risk modeling, data know-how and also quantitative skills. So you definitely have to understand how more complex models are being built, which statistical approaches can be used. Sometimes it's also a little bit depending on various coding skills. Yeah, so we usually use various coding skills in order to produce the models. We talk here, of course, about models that are fed from many different data sources. So simple Excel cannot really build the models that we are working on here, but there is quite a lot of also IT capacity behind it. And if you're looking on the reporting side, for example, this is more based, I think there is a lot of reporting still done in Excel, but also out of automated sources that we're then transforming in the, let's say, predefined structure that we need in order to have a consistent data flow possible for the various managerial bodies that we are delivering the data to.
Is there any specific skills that I would need to have, other than the ones you just mentioned when it comes with quantitative analysis, data management, I think I'm going to guess as well, using Excel and understanding the tool set itself, IT backgrounds when it comes to coding. Is there anything else that I might need to have in order to go into that field?
I think, so it depends on which level you want to start.
Yeah.
If you start, let's say, at a junior level, I think there is in general a requirement to have a good ability to think in a structured way, to understand connections, obviously to have a little bit of a feeling and interest in data and banking overall. I think this is very important. We do not want to create any models or reports that our other, for example, business functions cannot relate to. So it is very important that you have a certain understanding of how a bank works and how certain products, for example, work. But I think this is something that can also be learned in the course of an onboarding journey in the bank. Yeah. But overall, I think this interest is crucial. Yeah. And then it really depends on the specific task. As I said earlier, if you want to do modeling but you have no coding knowledge at all, it is maybe very difficult to do so. But we also have some tasks and some job profiles that also work more on a qualitative side. Even though in my area this is not the predominant requirement we have.
That makes sense. Then maybe to wrap up the space, is there anything else, any ideas or anything, tips you might have for any of our viewers that might be interested in that field?
Yes, so I think overall, if you're interested in banking, if you're interested in data, if you're also willing to improve, for example, working with data and the respective skills, coding, this could be for sure a great opportunity, not only because this field that I'm working on is, in my view, quite interesting, but because there are also many interconnections with other areas of the bank. And I think banks in general have a very vast opportunity that they provide in terms of the different fields. You can work on the front line working with customers, you can work in more data-driven areas, you can work on IT areas, you can work in areas that structure the business. So there's a lot of different things you can do in a bank. There's a lot of different data and interesting topics you can tap into. So I would really just say, if you have an open mind and the overall area interests you, it can definitely be something for you where you can find an adequate position.
That sounds cool. Thank you very much for your time today, and thank you for explaining the terminologies to us, because for me that was very interesting and relatively new.
Thank you very much for your time.
Perfect.